But also Apple, I see Apple breaking down here out of this flag formation. And I've got some downside targets on it. If the market can't really get anything going and starts to look bearish, I will look for a bearish continuation here on AAPL for a day trade. And oh man, did we get a bad Apple in the market today. Shares in Apple, they're down 3% here, and they've rebounded a little since the biggest dip on the day. But what a call as far as the Apple puts. If you traded next week's, you're up over 200%. If you traded this week's, some of those options were up 1,000% today. Okay, and it's all from one key technical setup called a bearish flag. It's a continuation pattern that has an over 80% hit rate. Do you know how to trade it? Do you know what it looks like? If you don't, stick around, because in the next 3 minutes, I'm going to tell you exactly how to trade it and exactly why the best ones form with only 3 steps. Let's get right into the chart. What is a bear flag? Okay, a bear flag is simply a continuation pattern where price makes a strong leg down and then it takes a second to pause and catch its breath before continuing back down for around the same move that it made previously. Okay, it's a 3-step pattern, and I can show you right here. The first step is that down leg. The second step is the contracted price and the pause in the trend, and the third step is the continued move down to the new lows. Now, there's a few things you can look for here to really confirm these. The first is look for strong volume on the impulse leg. Okay, look for volume to be wide here. It's expanding. And then during that contracted period of phase 2, you want to see volume dry up just a little bit. You want to see nobody really stepping in and taking control of the volume. Bulls are weak. Bears aren't in any type of press the foot on the pedal type of mode, but they're still there. They're present. And then finally, what you get, that breakdown from 2 to 3, is another expansion of volume, and you get a speed up in the name of the stock. That's exactly what we got today, guys. A great downside move. And when I came into the market today, I'll clean this up for you guys a little bit. When I came into the market today, I had these patterns right here drawn on my chart. You can see here this long trend line going back to August and the summer of last year. And it formed a support many times on the chart. Once here, twice here, once here, once here. At least 6 touches. That's a very strong trend line in the market that we have in place. And what happens? Well, we broke through that trend line. Price failed to make higher highs, and the trend reversed. And in fact, the trend reversed for the first time in a very long time in this name. And it reversed with another key technical pattern, a head and shoulders reversal pattern. And a head and shoulder has a lower high, a higher high, and then a lower high. And it's a great technical indicator of a trend reversal, okay? So I see those things. I see, hey, trend line breakdown. I see head and shoulders reversal. I see down leg on strength. And then I see the market pause and catch its breath. And my mind goes, if I've got to go out there and look at 50 different markets and pick one market that's for sure going to trend in this direction, and nothing's for sure in the market, keep that in mind. We're simply doing probabilities here. Nothing is a certain for sure case. But if I've got to pick from all those different markets and pick one that's for sure going to go in one direction, I want to see something like this. I want to bet on this type of trend right here. And so I said this morning, I've got downside targets on Apple. I'd look to capitalize on a bearish rally to the downside. And boom, we hit every single downside target. We hit the measured move of the flag. And when I say measured move, guys, this is another reason we love to trade technical patterns. Not only are they high probability, but we can forecast a move, okay? And this is what you do with a bear flag. You take the rally, the last high in that rally, and you draw it all the way down to the middle of the flag. Don't draw it to the bottom. Don't draw it to the top. Draw it to the dead center of that flag. That's your measured move. From here, take that distance and reflect it to the other side of the flag. If we get the continuation, if it happens with confirmation, it's going to come with a similar type of move as the previous move before. And boom, that's a bear flag. That's how you trade it. That's how you bank on technical indicators. Did I capture this entire move? I'd be silly to sit here and tell you guys I was in puts the entire day. That wasn't the case, okay? I've got other things to go out and do in my day. I've got to go make things happen. I've got to be away from the screens for a little bit of time, which is why I like to swing trade. But sometimes I'll come in for the morning and I'll snipe a day trade when I've got a setup like this. And I'll snipe a day trade in the first hour, hour and a half and be off with my day. So that's exactly what I did on Apple. It was a great bear continuation trade, and I hope you guys capitalized on it. If not, that's okay. You know what a bearish flag looks like, and next time you'll be able to jump on this and make some bank, guys. So that's all I've got. Stick around for the next video where I'm going to get in to the watch list for Wednesday's trading action. And don't forget, President Trump speaks pre-market tomorrow. That's an event, okay? An event in the market. And we'll see what happens there, guys. But peace, that's all I got.